Thanks everybody for being here. This is Aspen Woods again. Our second week of doing this podcast. We're going to talk about, a year of announcements with Bitcoin in 1 week. Our producer, just an FYI, has separated bit and coin in the the subject header of this. He's going to fix that here shortly. So yeah, Bitcoin, a year of announcements in 1 week. Davos happened last week. So far this week, last week also the rescission of SAB 121. It has amazed me over the past year, and then of course this week, how the amount of announcements that have happened with Bitcoin. If this was done 5 years ago, or if this was done 3 years ago, the amount of announcements that continue to happen around Bitcoin and its adoption. And in my mind, adoption is simply use or ownership at this point. But the amount of announcements is it's hard to keep up with. And so we're going to talk about that today. So, Tillman, how are you?
I'm great. I love, there's no shortage of it. I love the most recent one today where we found out that banks could have always, custodied
Shocking.
Bitcoin.
Yeah.
There's been nothing standing in the way of them holding Bitcoin for their customers and serving their Bitcoin customers. So, I mean, just the fact that that was said from the podium it was said from is, like you said, a year's worth of news in a week. I mean, that alone is mind bending as
Yeah,
to what the
if we would have
ramifications of
gotten,
it is.
Jerome Powell, the chair of the Fed, to say it's fine. Bitcoin and crypto banks can handle it however they want. They're free to custody it, and as long as they're understand the risk, that's fine. If that would have been said 3 years ago, Bitcoin would have raced up 25% in 30 to 45 minutes. I mean,
100%. Yeah.
it was there's a couple reasons why it was a stunning revelation. One, it's not been true. So Operation Choke Point 2.0 happened over a period of 3 years, where crypto companies, anybody associated with crypto and Bitcoin, and any company and a lot of individuals associated with crypto were debanked. There was a systematic process by which both the Federal Reserve, the OCC, FDIC were involved in debanking folks that had anything to do with crypto and Bitcoin, and individuals as well. So that hasn't actually been true. And then out of the mouth of Jerome Powell himself, when asked that question, a complete reversal immediately. Another interesting point about that is that when the working group was established with David Sachs and others associated with creating new regulation in the Bitcoin and crypto space on a go forward basis, there were a lot of regulatory agencies that were brought into that conversation. Guess who wasn't brought into that conversation? The Federal Reserve, the FDIC, and the OCC. They were left out of that working group. So, interesting dynamic. Interesting that Jerome had that to say. And so we're living in a time right now where announcements come on a daily basis, multiple announcements come on a daily basis. And it's just a question of how does the market receive those
Well,
announcements?
yeah, well, the question to me is this priced in or is it not?
Hmm.
And the reaction to the market of these announcements, it's almost like it already knew. And I don't know, the price is just so different this cycle than it's ever been in previous cycles. Like you said, I mean, the price movement should be absolutely skyrocketing based upon a percentage move like last cycle. These announcements are not small announcements, but it's not. It's, what's it up to 105?
Hmm.
It's not just parabolically moving upwards, which lends itself to you having to assume that there's a lot of liquidity inside of this market at this point. Like, it's a much more mature market. It takes a lot more, you can move price on low volume, but moving price on high volume becomes hard to sustain. It's a much harder, thing to do for extenuating periods of time. And I think that we're now seeing, the critical mass inside the network that is Bitcoin, both on chain and off chain in the form of ETFs. I think it's at a place where it's a lot harder to move that market, and it's a lot harder to move it up. It's a lot harder to move it down. And the people that could move it don't move it on news like this. They're still accumulating. They're still building infrastructure behind, what their core business and tenets are, which is, they're going to supply products and capabilities to trade those products in a digitized manner. And that is clearly what the exchange in Texas that BlackRock and Citadel are building is about, right?
Yeah.
Frequency of trades, instant settlement, more transparency, more efficiency. It's good for everybody, right?
Yeah, it is. I don't know if you saw this earlier today, but we are up to 14 U.S. states have introduced some form of a Bitcoin bill, Bitcoin reserve, strategic reserve of some sort. So 14 states have done it at this point. Texas being the biggest one, Arizona and others just across the board. Ohio has, Indiana has, Illinois has. It's just 14 already have done it, and there's more to come. And so you have, Jerome Powell at the Federal Reserve saying, "Nope, good banks, you're good to go. Just make sure you understand the risks." Now we're up to 14 states that have introduced bills. I'm fairly certain I saw a headline a couple days ago that Arizona has passed the bill in the House, and now it goes to the Arizona State Senate. Again, that's remarkably fast movement, and again, another headline that 4 years ago would have exploded the price of Bitcoin. But it's just another headline in a litany of headlines. The subject of our talk today is a year of announcements in 1 week. So we have, additional state-based announcements for Bitcoin Strategic Reserve. We've got Larry Fink and a 700K price target associated with Bitcoin last week at Davos. We've got Ray Dalio talking about Bitcoin at Davos last week. We've
got multiple people at Davos, not only talking about a new form of arms race in the form of computing power, right? And this launch of DeepSeek and what the implications on the markets that it had. I mean, just that alone and the upheaval that it has caused over the last week, it's extraordinary. I mean, it's unprecedented. And the fact that they've got as many NVIDIA chips as they are now reported to have, and they got them without our permission, it opens up a huge now political piece of the puzzle that I'm sure will be addressed, and I think is already being discussed as a necessary part of addressing kind of the power landscape that is to come, which is AI and crypto, and making America the center of that, or the capital of it. It blows my mind, but that central thesis, in light of this week's events, how much more important do they now become? It's infinitely more important.
It's you talked about potential, price action, right? Why isn't there more price action in Bitcoin? Why hasn't it blown through highs? I guess the other, the other side of that coin is it hasn't moved down in any meaningful way.
No.
Over the past 3 to 4 months. And again, that has to do with two things. Like you said, it has to do with liquidity and the bid that exists, and the announcements that exist that presuppose the bid in and of itself. So, we're sitting at 105 and change. We were up at 106 earlier today, which is 2 to 3% from its current all-time high, right at around 108 plus 109. Um, Again, previous cycles, when you get to new highs, by the way, we've hit new highs over the past 9 months. I don't know how many times, a dozen times maybe. And so in previous cycles, that dozen that I just talked about of new highs were actually a baker's dozen of downside adjustments after hitting new highs. So previous cycles, you hit new highs and then you're down 5%, you're down 10, you're down 15, you're down 20, you're down 30, you're down 50. So the 2021 high, at this point, was down 65% from where it was previously. So there are two dynamics here. There are blow off tops that continue to go higher, which I don't know. A year ago we were in the 40s, and now we're sitting at 105. So blow off top or not, that's a major move. And then there are plunges to the bottom, and we haven't seen that plunge in any meaningful way. And again, to the point of what we're talking about here, it's very difficult for there to be a meaningful plunge when every day there's some new conversation associated with buying more Bitcoin and buying it at scale, right? I'm remiss to not talk about the fact that Larry Fink not only talked about a 700K price target with Bitcoin, which by the way is a 7x from here. Everybody talks about, well, Bitcoin's a good deal and you should have some of it, but it's not going to go meaningfully higher, and it's not going to give you the 5 to 10x that a meme coin can. Well, unless you're disagreeing with Larry Fink and his 7x from here, yeah, it's still a meaningful, investment to have in your portfolio. The other thing that Larry talked about is the tokenization of securities, and that was his next, sort of evangelical take at Davos, is that the tokenization of securities should happen now. Like the sooner it can happen, the better. Again, talking his own book associated with the Texas exchange that they're putting together with Citadel. But at the same time, what does that mean for the industry at large, the tokenization of securities and real world securities, real world assets? Talk about that, Tillman.
Well, real world assets have been being talked about even back last cycle in the form of NFTs. I mean, real world benefits, real world merchandise, real world value was being put, quote, on chain, attached to NFTs and characters that people created. I think the interesting thing about Wall Street talking about real world assets is that they're lending, they're talking about property. I've heard Larry Fink mention several times and equating Bitcoin to the economy of real estate and what that looks like, from a derivatives perspective, an options perspective, a lending perspective, a yield perspective, like all of the long-term capital benefits and of appreciation and against inflation perspective, like all of those things exist inside of Bitcoin. But Bitcoin has some unique qualities to it that those items, real world assets, they're hard to put on chain, which are like the liabilities attached to an asset, And so I think it'll start with things like car titles and deeds. There's a lot of inefficiency there. Think about, if I want a license plate, right? There's people mailing pieces of paper all across the country finally to get me a big stack of paper that I got to take in, to government hours, and you go through security and hand them to the registration. And then they have to look through them all with hard manual labor man hours. And then, at the end of that paperwork process, I get my license plate after I pay a fee. Well, all of that can be digitized, removes all the friction of that, gets it settled instantly without any hard manual labor hours attached to it. And so there's going to be efficiencies that blockchain brings to the table, no different than what AI brings to the table, that are it's going to change businesses. And
Mhm.
to the extent that you believe in blockchain, then you have to believe in Bitcoin as a store of value, or as, like what Larry Fink calls it, a global hedge against fiat inflation. And
Mhm.
that's an interesting point, because most of the fiat is measured domestically against its domestic inflationary value. How much is a carton of eggs? How much is
Yeah.
milk? Milk and eggs are different prices to different people. The people who suffer through raising chickens get them for free every morning,
Yeah.
right? And if you want to milk your own cows, you can get milk for free, and then you can have boutique eggs delivered to your doorstep with a concierge program, and it's going to cost you a lot more, right? So everybody's got their flavor of ice cream as it pertains to what their costs look like. And as Bitcoin is added to both your life individually, you're hedging against those inflationary costs, uh, with an asset that's measured globally at a price level against the global fiat system. So it's a global hedge against fiat, not just a domestic hedge against fiat, which is a distinction that is incredibly valuable. Because if especially, that's why it's more valuable if you're in kind of a newly developed country that doesn't have a stable financial system. You participating in Bitcoin is like being grafted into much more stable financial system than you can get domestically. And that's why Americans have been slower to adopt. On a need basis, they're more geared towards the gains that they can get by adopting blockchain. But I think 2025 is going to be a big highlighter of how disruptive the technology blockchain can be, not only as a store of value and a hedge against fiat inflation on a global basis, but in terms of efficiency deltas that can be created within our manufacturing environments, and any company basically that is here in the United States.
Based on the litany of analogies that you just used in that commentary, our next show is going to be called Bitcoin Chicken or the Egg, right? Is it the chicken or the egg? So it's yeah. To me, the amount of announcements that keep coming out, right? So again, this is one that some people watching this may have missed, but the incoming Treasury Secretary talked about Bitcoin on an interview just yesterday and said Bitcoin isn't going anywhere, and everything and anything associated with Bitcoin in response to a Bitcoin strategic reserve question, everything's on the table. Again, these are the kind of things that are being said by the heads of monetary policy in the United States. Remarkable responses to questions about Bitcoin that if they were said 3 to 5 years ago would melt everybody's faces. I mean, it just incredible things to hear from an incoming Treasury Secretary and a current sitting chairman of the Federal Reserve. Yeah, Scott Bessent saying, everything's on the table with Bitcoin, and Bitcoin's not going anywhere. It's here to stay.
Well, it's a testament to how that Bitcoin by itself, honestly, is like a miracle. And I'll
Mhm.
tell you why. Because we, as a Bitcoin community and as a crypto community, are not very good house guests.
Yeah.
We do not play nice with TradFi, in my opinion. I feel like there's a lot of infighting. There's a lot of childishness. There's just things that probably were pretty distasteful and slowed the progression of integration with TradFi. But I think Bitcoin, in spite of that, is so mathematically beautiful and genius that it stood the test of time because math stands the test of time and supply demand dynamics stand the test of time. The building blocks of an economy stand the test of time. And in spite of all of the hindrances that, that we throw in front of ourselves, the math speaks for itself. And ultimately, TradFi guys and gals are all math, right?
Mhm.
And they're
Right.
looking at 16 years of growth, and they're looking at the market that's being served against the potential market that can be served, and they're going, we want to be the facilitators of that market being served. And the fact that it's digitally instantly settled cross the entire world is a meaningful difference to anything that exists today. There is no global economy without tremendous costs, friction, time delays. Doing business internationally, if you're going to send an international wire, there's exorbitant fees. It's like, paying for your peanuts at the airport, the
Mhm.
lounge. I mean, you're going to get gouged compared to what traditional money transmitter fees should look like in terms of on the blockchain. And so you're going to see that delta really shrink and the efficiencies be inserted into that. What does that do? It takes your marketplace now from just being domestically accessed to being internationally accessed overnight without any encumbrances or friction. I mean,
Yeah.
that alone, you're opening every business up to another subset of customers that they otherwise could not get. That's meaningful. That's GDP growth. You know, untold amounts of GDP growth.
There has been a post as well as an article that happened in Forbes that has been making the rounds today, um, that I think we should discuss, and that's Michael Saylor and MicroStrategy being on the cover of Forbes for his ability to manage, manipulate, and use current traditional finance levers on behalf of MicroStrategy and in conjunction with Bitcoin. Tillman, I know you've got a lot of got a lot of theories and thoughts on Saylor and what he does. Give me some thoughts on the fact that it's gotten its way to Forbes.
Well, he's definitely going to be a bank. That Bitcoin banking is going to be banking's the largest industry in the world. We can all agree on that. And Bitcoin being added to the banking side of things will allow a new concentration of banking power and wealth in a way that I think we can't even fathom. Why? Well, because Bitcoin allows you functionality inside of a bank from a lending and collateral risk perspective that no other asset does. And Michael's proved that. And so that's why you're seeing the banks step in because he's basically given them the blueprint and built 90% of the building. He just hasn't started the retail functionality yet. But he's done, if you want to help him, if you want to deposit into the bank of MicroStrategy, which lots of people are doing through his debt instrument, it's no different than going and making a big deposit in a bank, right? So he's proven that this model is no different than like if we've been eating all of our food without salt,
Yeah.
and for the first time we eat a meal with salt and we're going, this is the best meal we've ever eaten, but we don't even realize that if we just add salt to every meal, they all will be equally that much better in taste profile. And so the seasoning that is Bitcoin, if you're a real estate company, lots of real estate funds are coming out right now with a Bitcoin flavor to them. You got where they're going to take 10% of the cash value that they extract from the properties and put it in Bitcoin as an additional upside kicker to yield and growth potential, but also as a hedge against real estate values being, cyclical. So it's a really dynamic thing that fits pretty much in every financial profile that you can imagine, to the degree that it's trying to solve the problem that's being solved. And the problem that everyone's trying to solve is the inflationary risk that we have in an economy that's growing as fast as we're growing, with the potential of AI being on the horizon. A lot of people complain about the inflation that we have and the debt that we have. We've always outgrown through our top end potential. And if you look at what we've created in the last decade in the form of AI and crypto, I think that keep the printing presses rolling. That innovation is endlessly valuable. It's measured in digits that we can't comprehend right now, because it's going to include 5 billion people in a global economy that are separated by friction and cost. And you combine those people, and you let it become a globalization of frictionless, trustless transactions. And we
Yeah,
can't even price that in.
there is again the Forbes article, and hopefully our producer can pull that up real quick so people can see it. Um, the title of the article in Forbes is "MicroStrategy isn't just a giant Bitcoin bet; it's a revolution in corporate finance," which I agree with, right?
100%.
So again, in our silo that is crypto, Bitcoin, and what we follow on a daily basis, um, it's easy to see MicroStrategy as this leveraged Bitcoin play, and that's all it is, and that's the entire focus of it. But at the same time, you and I have been around long enough to understand the fact that this isn't just a Bitcoin story. It's also a play on corporate finance and leveraging the architecture that is traditional finance and Wall Street to execute a Bitcoin strategy, which I find maybe even more compelling than just buying $1 billion of Bitcoin every week, which again, that's another bid associated with Bitcoin and why it remains near all-time highs. But more importantly and more interesting, because it's a blueprint for corporations on a go-forward basis. And there may be some corporations that use these levers and pulleys and the like, not just for Bitcoin, but for something else. But the way that he's doing this, and the way that he's convinced banking and global institutions to be involved in the lending of capital in one way, shape, or form, to execute this strategy for him is the story, right? So whether it's using equity and the selling of equity to buy Bitcoin, that's one way of doing it. Using the bond market and convertible bonds to then again raise capital and buy Bitcoin, or then again it's a version of just this past week he announced the creation of preferred equity, and using preferred equity to raise capital to then again buy more Bitcoin. It is
but dissect it to the fundamental building blocks.
Mhm.
What he's done is he has started to produce yield,
Mhm.
and he has started to use debt to borrow against Bitcoin. He's just figured out an ingenious way that fits within the paradigm of the TradFi spaces. They're the same vehicles, so they understand it. And so he's again added Bitcoin to an industry, and it's very complementary. But this isn't new. This is, companies borrow money all the time to do stock buybacks and to do those. What's different here is that Bitcoin is not it supersedes very quickly when you accumulate a lot of it, the primary upside of your business. The primary revenue stream of MicroStrategy is peanuts compared to the daily fluctuations in Bitcoin price and what that impact is in terms of their net value. That that is the bet of all bets. That's betting on a new dollar essentially as a lending tool and a borrowing tool, and that's made him a bank inside of the structure that he works within. That's why he's paved the way. I mean, there's no other bank that needs any other bringing lending to Bitcoin, right, as a fundamental asset where banks will take your deposit of Bitcoin, they'll hold it and they'll give you money and they'll give it to you at a preferred rate over any other asset you could give them. That is an improvement that doesn't even exist right now for gold. You talk about the superiority of Bitcoin to gold. Well, right now, take a gold coin, go down to your bank and say, hey, I'd like to borrow $1,000 against the $2,000 value that this 1 ounce American Eagle has. They will not lend you that $1,000, even though the ratio makes perfect sense to lend against it. Doesn't fit inside the box. Well, when you can roll in with a cold storage wallet and go, I need to buy a house. I want to borrow money at 1% interest rate, or I want to borrow money at you're going to pay me a 3% interest rate, and I don't have a mortgage because you want Bitcoin deposits. Like, who knows where the market will settle from an
Yeah.
incentive perspective, but it's coming, and it's going to add so much liquidity to the banking system. It's crazy.
Well, as a corollary, right? So it remains our thesis, and the thesis continues to play out that there's an underlying, really, really aggressive bid underneath Bitcoin, which has kept it from moving meaningfully lower. And any time that it does, because by the way, we're at 105. We saw 97 just 36 hours ago, right? And it was scooped up in minutes. It went from 97 to 102 in about 3 hours. So that bid exists, and one could make the claim that some financial institutions are understanding and seeing the current environment in that bid. So the willingness to lend to MicroStrategy and Saylor associated with that dynamic and associated with that bid, it doesn't have an end in sight, right? So it's just a question of what different types of financial instruments does Saylor want to use to continue down this road. And so, an earlier podcast that you and I were on this week, Scott Melker's pod, we talked about the fact that, there's probably not going to be a ton of corporations that end up doing the same thing as Saylor. Like, this is a very involved and heavily committed strategy that's buying enormous amounts of Bitcoin. But if you get 35 corporations that turn into 75 corporations that turn into 200 corporations that are doing 10 to 15% what Saylor's doing, that is an enormous amount of money associated with buying Bitcoin.
Well, if you game theory that out, it puts Bitcoin at infinity. Right, because Bitcoin will then, that's what people say about like the singularity effect of Bitcoin, that ultimately everything would be priced in Bitcoin and the value of the world would be ever increasing. So therefore the value of Bitcoin would be ever increasing alongside that value. That's a little much for me. I don't think that it will happen. But I do think that as it pertains, no different than a barrel of oil has been a global value against all fiats, because it's everybody needs it. Everybody's got to buy it. So we all have to agree upon these exchange rates that by which we are trading paper for a commodity that's very valuable and useful to us. Same thing exists with Bitcoin, and so companies are not going to be able to do what Saylor's been able to do because their net revenue proportionate to the timeline by which they get in is going to lend their ownership of Bitcoin to be limited to a much smaller percentage. Saylor's percentage of Bitcoin as a percentage of the value of their company is very, very disproportionate. And it's because he was an early adopter, like at a
Yeah.
at an industrial level. No different than if you were an early adopter. If you were sitting on $10 million of free capital that you wanted to place in 2014,
Yeah, right.
you'd be that version on an individual level that Michael Saylor has proven to be on an equity level.
It's well, if you were going to do that in 2014, you'd hope that you'd have the Biff Tanner Back to the Future 2 little book, right? Oh wait, I know what happens with Bitcoin 5, 10, 15 years down the road, so I think I'll make that play. Yeah, it's just a very compelling narrative associated with Bitcoin, and appropriately so. Crypto Twitter has taken to being on the Forbes, front page, the cover, has not worked out well for some. There have been some where it's not been optimal. It's been suboptimal. SBF found himself on the cover. Elizabeth Holmes of
it's like the Campbell's soup can. It has not played
what's
out
his
well for
face
people.
from WeWork, found himself on the
Yeah.
Forbes cover, all at moments where they were at the height of their quote unquote
Icarus.
popularity and powers. So makes sense for that side of the story to be told as well. But at the same time, these are all levers that are being pulled. One hand, Saylor has on the lever, and another hand is, a global banking institution helping him pull that lever. So this is very different than smoke and mirrors associated with, the rise of some company that is not transparent, and we don't know where the capital is or is not going. This is a public company that each quarter has to, produce results that are transparent. To say nothing of the fact that, and our producer, I'm going to try and send this tweet to him as well. But did anyone notice, because of the change in accounting and the FASB rules associated with holding Bitcoin on your balance sheet, what that did to Tesla's balance sheet over the past few days? It was a significant net plus from an accounting standpoint. So the conversation then turns to, imagine what kind of plus that's going to be the next time that MicroStrategy announces their quarterly earnings, because that will have kicked in. In other words, we may have seen the jet propulsion version of what Saylor's doing. We may see whatever's above jet propulsion, and
No, I can give you the words. We've seen the unleveraged version of this, and we're about to see the highly leveraged version of this.
Yeah.
Because when you have to discount a asset to be a liability on your balance sheet, you can't leverage again. You can't borrow against it. It's already a liability. So you can't double borrow against the liability. Whereas if it's an asset, it becomes borrowable. And so the question becomes, for every company, if Bitcoin keeps doing what it's been doing over the last 16 years, and I can borrow fiat at a rate that is less than the appreciatory value on average over that 16 years. So if Bitcoin's appreciating at an average of 40% annually, and your borrowing costs are 9% annually, right? and you can collateralize the loan with the Bitcoin. So now I'm getting my real world asset that used to cost me fiat to buy. I'm borrowing not against with a payment attached. I'm borrowing against the 40% delta that I get to enjoy by owning the asset. So it's like you're getting to spend fiat inside of a delta that you create because Bitcoin has done what it's done over such a long period of time.
Yeah, there is a tweet from our buddy Jeff Park at Bitwise. Because of the change in mark-to-market accounting rules, Tesla's mark-to-market gains on its Bitcoin holdings are 3x the venture capital it raised before going public. So, I mean, think about that. I mean, that is a remarkable statement in and of itself. It's a remarkable reality in and of itself. And again, what's that tweet going to look like when that same accounting ruling is overlaid on top of MicroStrategy when we get there for the next quarter? And how do you ignore that if you're a corporation of any kind associated with having to do public disclosures on a quarterly basis? The associated benefits, the associated benefits associated with bringing Bitcoin onto your balance sheet, the associated benefits of, as we see there with the tweet, mark-to-market gains, the associated benefits of short sellers don't like to short something they don't understand, so they stay away from your company, and the associated benefits of upside with a Bitcoin announcement that you're bringing onto your balance sheet that we've seen over and over and over again. Then the associated upside of the likes of the Gen Z folks and millennials who think Bitcoin is cool. And so now they want to use your product. So now revenues increase. I don't know how many of associated I used there, but it's a lot. And they're all compelling reasons why you add Bitcoin to your balance sheet as a corporation. Ergo, the reason why Bitwise has put out, at minimum, a paper and talked about ad nauseum that corporations adding Bitcoin to their balance sheet looks more like a super cycle than just a trend.
It's a force multiplier, right? It's a force multiplier on both sides, on top line growth and on hedging against downside risk. And when you get something that cuts both ways with the same dollar, it's a unique mechanism. And why wouldn't you add it to an overall financial strategy, both from a retail perspective and a corporate perspective and a sovereign nation perspective? Because it has the scalable functionality to allow that much volume and that much liquidity to be held within its network. Like it's a no-brainer.
Yeah, it's a force multiplier is what it is. That's probably an appropriate piece of terminology to talk about it. And so again, we come back to corporations as a force multiplier, states and United States-based states using it as a strategic Bitcoin reserve, and those announcements, 14 of them now. There's going to be more that will come. On the federal level, what does that end up looking like? So let's talk about the federal level in the last 15 minutes or so of our conversation today. I had a conversation and reviewed a paper that was put out by Caitlin Long, having to do with the Bitcoin strategic reserve and potential outcomes once that does happen. Not only potential outcomes short term, but potential outcomes long term. And her thesis is that it's enormously important that there's language associated with the legislation that comes along with that, because to do that in a serious and meaningful way, it's going to have to come via legislation. So if it's done via legislation, that there needs to be provisions inside of that thing that are anti-bailout language, meaning in the future that the Bitcoin strategic reserve can't be used as a bailout slush fund for whatever crisis happens at whatever time. And I thought that was really smart and important. And the reason why is because governments change every 4 years, sometimes every 2 years, but governments change every 4 years, and there can be wild swings in the political winds on a 4-year basis. Previous 4 years versus what we've seen in just the first 2 weeks of the Trump administration are literally at polar opposites. So smart.
I would agree, but I think even Bitcoin has internal mechanisms that solve that to some degree. What do I mean by that? Well, if they want to move that Bitcoin, we will know it.
Mm-hmm. Yeah.
And our voices will be heard.
Yeah.
And it will be either approved by the people, or it may be the very thing that gets somebody to lose the next election.
Yeah.
You go against, like, it's at least it's public information. You know what I mean? And so I do think, though, for the best interest of the people, you have to have a longer time horizon than 4 years on the Bitcoin front. And so I would suggest, that the government put it into a multi-sig smart functionality wallet that doesn't allow them to sell it for, basically lock it up, and lock it up inside of a smart contract that is public. And when you do that, it's done. It's like buying a CD at the bank. You wait until the CD expires or whenever that lockup agreement. And if they do that, then sure, they can sell some of it, but they can never deplete it during one cycle, right? If you did a lockup agreement that was on a 12-year cycle basis or a 20-year cycle basis, right?
Sure.
There would only be so many expiring inside of your 4 years of power. And if you were the president that took all of those and dumped them and sold them all the second that they expired, you'd be running against potentially somebody that would be going, I'm not going to sell the 4 year. Yeah. So I think if you just add a little bit of management from a smart contract perspective, then, we can solve that problem pretty easily.
I like it. That's a reasoned response associated. Again, to me, does a Bitcoin strategic reserve happen or not? That's an open question. To me, the executive order stuff, it was obvious that they, the people involved in it probably did a pretty decent job of evaluating, can we pull this off with an EO, and not really. You could say that you're not going to sell any more stuff, but you don't have to have an executive order to do that. You can just not sell more stuff, not sell more Bitcoin. On top of that, creating Bitcoin strategic reserve and having that done from a legislative standpoint. The legislative process is not simple. It's not easy. It's pretty involved. And
I believe. What do you believe should be in the reserve?
Well, I think it should be Bitcoin only, but at the same time, I think that the legislative part of this process is a heavy lift. I'm skeptical that it will happen. Is my point.
Well, here, I'm in agreement with you. I do believe it should be Bitcoin only, and I simply believe that because it's the only one that has been fairly and equitably distributed from day one.
Right.
There's been no pre-mine allocation and pre-mint allocation.
Sure.
So I think that puts Bitcoin in a class by itself anyways, by definition. So it should be in a class by itself as it pertains to the strategic reserve. I don't think that the strategic reserve is that far off. And my argument would be this. I'll start with what you led in with the call, with our call today, with about how many states are leading charges to do Bitcoin specifically.
You're right.
It's all at a state level. There is no strategic crypto reserve talk. That only has been in the federal level since Trump was kind of 3 days out from inauguration. At the state level, those people are all Bitcoin hardcore maxis as it pertains to that legislation. So I would think that ultimately what would rule the day is Trump's belief in state rights. And he would take a heavier head nod and a heavier look and a vote of confidence from the fact that the states are all wanting to move forward with this and they're all in agreement that it's a Bitcoin only reserve. That to me, like if I'm him, that's the green light to go, well, I couldn't, executive order wouldn't work, like you said. But if all the states want to do Bitcoin only, well, then the federal government's going to do Bitcoin only, so that we're all in agreement, we're in congruence with one another. Because there's risk if he takes a different direction than the states take. Let's say the states all do a Bitcoin only reserve fund, and let's say he does a basket of a bunch of other coins. Well, we've all seen the top 10 list and what it looks like year to year to year. There's nothing the same. I mean, I'll show you literally snapshots for the last 15 years of the crypto markets, and there's only one that's been the constant, Bitcoin. And it's because the network is built on fair and equitable distribution of value. So if we, as a federal fund, have all this basket exposure to risk, and we see the same future that we've seen in the past, it's going to greatly dilute the value that Bitcoin brings into that that fund. And they're going to be scrutinized and judged against the states that went Bitcoin only. So it's a lot less politically messy and risky to just go, the states have agreed to the Bitcoin only. That's what we're going to do from a federal perspective and just move on down the road. That's what I would say is the path of least resistance.
Probably the most important question I can ask today, and something I've been wrestling with for most of the morning, is, I'm a watch fan. I know you're a watch fan too, and I currently wear a Sky Dweller, and I've been wrestling with this, and I'm wondering, and Alan, if you can pull it up, should I trade my Sky Dweller for the watch I've found here today? It feels like a no-brainer to me. And if Alan, you can pull that up. There's a clear. I mean, this seems like something that would make sense. Waiting for it to get pulled up, and I'm riffing while it's being pulled up. Enjoying this.
I'm sure the punchline's worth it.
But here we go. So we go from this to Trump's Bitcoin watch.
Listen,
crypto.
Don't underestimate the Trumpster.
4547 with the Bitcoin insignia on the back. Seems like a 1-to-1 trade to me. I mean, I don't know. Value.
I'll cut through that argument with a knife for you.
Okay, go ahead.
Rolex. Look at the market share dominance that they have. They are the Bitcoin of the watch.
They are the Bitcoin of watches.
And on top of that, the Sky Dweller, they have said, is the most complicated watch they've ever produced. So I would stick with that. I bet you the watch we're looking at right now has a off-the-shelf movement that's just slapped in there and spray painted gold and put an orange dial, and you're off to the races.
Well, you know this as well as anybody that I myself am somewhat complicated. So why wouldn't I have the most complicated Rolex I could find?
Yeah,
But
that you probably can't work, and you don't know how you don't know how to use any of the complications, and
yeah,
it's probably set incorrectly on pretty much everything other than the
you're
time.
probably not wrong. You're probably not wrong. It's possible that it may have the wrong date if I look at it right. What are we at here? What am I looking at? Yep. It says the 29th on my watch, and it should be the 30th. So I've got some adjusting to do. But again, the Trump Bitcoin watch, there's something about it.
Well, I know what my stocking stuffer is going to be this year, and it will be worn with pride.
Yeah, it is. I don't know if I could come up with one word, I'd probably say cringe. I'm not entirely sure who would wear that watch.
Listen, it's the
But
same people that bought the meme coin right out of the gates.
yeah,
It's
that's true.
it's loyal Trump people that love what he stands for and wants to. Listen. How many people that are just normal people actually give to super PACs?
Yeah.
None of them.
None.
That's
No.
all big corporation
Yeah.
money. These types of things are a way for an individual to donate essentially
Yeah.
to a person
Mhm.
that they admire and that they want to see succeed, and that they bought into the storyline of their value proposition. And same thing with the coins. It's I like the coins better, quite frankly, because I think they have a higher chance of holding their value than that watch does. But who am I to judge? I mean, that watch may go up in value
I
for
mean,
all
it
time.
may be the kind of thing. So all that being said, cringe or not cringe, these watches, you can actually pay for these watches either with Bitcoin or with Trump token on Solana on Solana Pay. So for all the cringiness of the watches themselves, when it comes to the actual use of crypto, that's actually they're putting their money where their mouth is, so to speak.
Well, listen, I've said this 3 years ago
Mhm.
on a podcast as it pertains to NFTs.
Yeah,
And here was the premise. If somebody that has an extraordinary brand, personal brand,
right.
like the example I used back then was Taylor Swift, because she was, like she is now, the center of all attention. But if she wanted to create the biggest gesture of goodwill
Uh huh.
that's ever been created
Right.
between a creator and their fan base,
Yeah.
she would launch a NFT meme coin,
Sure.
right?
Something. Yeah.
And then she'd say, I'm giving allocation to my entire fan club. It's going to be
Mhm.
airdropped to you. And by the way, no one can buy tickets to my shows except with these tokens. You do that, and you've basically deposited the future value of your shows into your customers' hands. And you've created an event that has made your most loyal people very, very wealthy on the back of your ecosystem, which gives them an infinite number of reasons to stay vested in that
Yeah.
ecosystem and to
Right.
grow that presence in the ecosystem. If you Trump, that's what Trump's doing. That's what he's he's doing it. Meanwhile, he's doing 90 other things that are headline worthy. It's he moves faster than any human being I've ever seen.
It is. There's another thing that I wanted to share that happened this week, or maybe it was over the weekend, or something. And it had to do, it was the cross section of AI and crypto from one of the smartest minds in the space, Eric Voorhees. And I think I sent it to you. Yeah, here it is. I'm gonna send it, and let's get it pulled up. Um, there, so he started an AI, search deal just like ChatGPT and others called Venice AI, and users. The premise is Venice AI, and the architecture underneath it is everything's private. They don't grab your data. They're not using your search for this. It's all private based stuff. That it's the antithesis of Chat GPT. And then, and I didn't know this was happening. It's Venice Private and Uncensored AI. But they announced on the 27th, at current prices, 250 million has been airdropped to over 150,000 users, and then gave the blockchain address, and the token sign is VVV. And I thought to myself that there's very few projects that come to market that are meaningfully well thought out, especially right now, because it's been meme coin mania and just existential levels of stupidity. But I saw this, and I was impressed. I was impressed that I've always been impressed with this project because, again, there's privacy and uncensored, and it's there. So some of the things that we believe from a crypto standpoint should exist, privacy and lack of censorship, is built into the AI product in and of itself. But then the fact that there's a token associated with it, and it has to do with users and their use of the platform itself. I think it's all really compelling, and it comes from one of the OGs of OGs associated with Bitcoin and the rise of crypto. If you go back to one of the initial documentary about Bitcoin from 2013, Eric Voorhees is there with Charlie Shrem and the Winklevoss twins and a couple other folks that have gone fairly sideways. Eric is as OG as it gets. And so I just, I wanted to bring some attention to this, that there are things happening out there that I think are bode well for the future. Again, huge, there are massive, shifts, tectonic shifts happening.
I'll take the counter argument on this. It may be the greatest thing since sliced bread. I've done no research, but I can tell you my 50,000 foot view. We are in an arms race. AI, no matter how good the model is, will be the limiting factor will be the hardware, but by which you control how many GPUs, how many CPUs, how many computers do you control as an aggregate, and on top of that, what problem you're addressing and how good is the individual program that you're using to address that specific problem. So if your intention is to use AI to solve very simple, kind of meaningless tasks, then I could see a democratization, decentralized force behind that. But unfortunately, if you're going to solve any of the most valuable problems, you're going to need the hardware and the facility that has to be managed by a central force, in my estimation, and has to have real boots on the ground and a real operating cost attached to the constant upgrades and upkeep that type of operation requires. And it's like these types of projects remind me of, it's like talking about Bitcoin, but only about price and only about the altruistic nature of its feature set. Like it's immutable, it's decentralized, it's all these things, but never understanding how the network works from a mining perspective. Like there has to be real computers plugged in for you to get all that good stuff. And you look at Elon Musk and what he did for the AI Twitter X deal. It's the largest building filled with computers that's ever existed in humankind. And so this DeepSeek deal, what's the shocking headline that nobody's talking about is that they pulled it off with getting that many Nvidia chips. The fact that they say that they spent as little as they did, you can debunk that just by seeing how many chips they've now agreed that they've basically got in the facility, Nvidia chips. So it's going to take a ton of money and a ton of management to rule the world. And AI is the sword that they're going to wield to rule the world, essentially. And so, there's going to be a heavier emphasis on hardware and on actual, facilities filled with computers than I think we've ever even seen. And I do think there's promise on the crypto mining stock front, because a lot of them are repurposing that computing power to help with AI. And if you can dual purpose the same computing power to solve problems that have huge deltas attached to them through AI, and at the same time, when no one's using that computational power or throughput functionality, you can then apply it to crypto mining. You've got one heck of a efficient system to kind of break through all the barriers that are creating friction and lack of liquidity in the markets that we see today.
At no time did you make a coherent point in that entire diatribe, and we are
We
all
were all dumber
dumber
for
because of
it now.
it now. No,
It's one of my favorite movie quotes, but I never can quote it.
yeah, I just find it compelling that we actually have, builders in the space that are doing something, they're
Yeah.
attempting something meaningful other than,
Well, and they are meaningful.
building an exchange,
Yeah.
to for all intents, exchanges are nothing more than let's collect fees for folks that want to gamble, and or starting a token that means nothing and has nothing to do with anything. As an example, Bitwise filed for a Doge ETF. Like, all power to Bitwise. That's fantastic. Doge does nothing and means nothing. But there are different realities in the world from what we think should be the way that things should happen, and so it's,
Well, let me say my piece on Doge or any of the cryptos that are like that.
Mhm.
They are doing something and they do have real world value. And it's sad that they do, but people have such a lack of identity in their life that if they can identify with something, it provides tremendous value to them. And when you identify with a community, and then that said token makes you a millionaire or makes you more money than you could ever make in your 9 to 5 job, the loyalty that's imprinted on that person's heart towards that community and towards that token is an identity that's stronger than anything else in their entire life. And so where your heart, there where your dollars go.
At no point did you make no, no, I won't say it again. No, it's you're right as it relates to loyalty. I come back to the genesis of this whole meme coin thing really became, a public phenomenon or a pop culture phenomenon with GameStop and Robinhood back during the pandemic. I mean, that was the beginning of this process. So that was version 1.0. Version 2.0 has been the meteoric rise of sports gambling here in the United States, and how simple it is with just the flick of a thumb to, try and do a $50 parlay that'll pay out $10,500. And then version 3.0 of that over the past 6 to 12 months has been the meme coin mania casino.
Well, and don't
I
forget, even the
remember,
government's got in on the action. You remember when the lotteries used to just be state by state or even
yeah,
local
sure,
lotteries?
sure,
Well,
yeah,
now we got the Mega Millions where it's
yeah.
combined, you win
So
$6 billion.
I'm old enough to remember when there were, so many quote unquote um, cryptocurrencies, and there were 2,800 of them. And it was like, wow, that's just way too many. And then it grew to 3,000 or 3,500. This is back in 2017 during the ICO craze. Right now, if you go on coin market cap, there are 10.4 million cryptos right now. 10.4 million. In 2017, there were
Yeah, but
20.
that's like me saying there's 10.4 billion coins in the world. But if
Yeah,
you're a numismatic, collector and you've got the one-eyed nickel that, the hobo nickel collection,
yeah.
um, you know, there's it's this game is not new. My dad collected coins. He loved, these rare coins. And this is back in the 80s and the 90s. People collected baseball cards and thought they were investments. People collected
Sure.
like, this is just a very quick way to get in. It's the velocity is a lot quicker, right? Everything moves more quickly and the your access is a lot greater. You don't have to drive down to the baseball card shop and buy a bunch of packs right when the distributor drops it off there so that you can hope to get the rookie card in one of the packs and make the big score. Now you just have to follow Trump on Twitter and
It's,
respond when he launches a meme coin.
I haven't been on coin market cap in a while because I'm a fairly Bitcoin centric guy. But I will say, I just saw something, top of the front page. The fear and greed index is currently neutral at 54, with Bitcoin at $105,000. That's remarkable stuff, man. That is remarkable stuff. We've got a ways to go. We've got a ways to go. There are a lot of signs that tell us beyond just the bid and all we've talked about here today. But that's another marker. That's another marker that says we've got a way to go. So
The one difference, though, is I'm going to give you a Vegas analogy, okay? You remember when Vegas used to be a bunch of independent casinos and hotels?
sure,
And what's happened now?
yeah,
All of them have been consolidated into
mhm.
MGM Grand Resorts. I mean,
Right.
they own 3/4 of the strip. Um, Up until this point, Bitcoin crypto has been Vegas with a bunch of independent operated and owned casinos.
Mhm,
Gemini, Binance,
mhm,
Coinbase, Kraken, you had all these independent shops. There's a new sheriff in town, and they're not building one casino. They're
mhm,
building all the casinos,
mhm.
and that's Wall Street.
Yeah,
And it's really interesting to see their casinos open for business, customers coming in the door, because you can almost see what Vegas is going to become. And if you're a part of old Vegas, you're nostalgic. You're going like, this is the death of old Vegas.
yeah. We're no more than 2 years away from Wall Street, actual Wall Street, being open 24/7. Because
100%, 100%.
BlackRock and Citadel are going to do it in Texas, and the minute they do that, in any meaningful flow at all, moving away from the ICE corporations, Intercontinental Exchange, away from the NYSE and the like, towards that exchange means they immediately have to do the same thing. And
And
so,
they're going to gobble up every loan that exists on paper
yeah,
and want to issue the loan digitally with
Yeah.
a new token as a real world asset. Like that's happening right now, and that they will become the biggest lender, therefore the biggest bank, the biggest revenue maker, because
Yeah.
everyone will want the efficiency of not having to go down and fool with pieces of paper anymore. And it's better.
Yeah, well, it's been a great hour plus here. We've enjoyed it. Second show, we'll do another one next week. At some point in the next 2 or 3 shows, we'll end up bringing a guest or two on and showcasing some additional opinions. Um, I'm currently wearing my Trump golden high top, so it's only fair that I get to watch. So we'll see where that goes. And
Listen, I think you need the matching tattoo. I think
yeah,
it's
probably
the,
Trump 47, indeed. Um, well, enjoyed it, and thanks for being here. And we'll see everybody next week.